In today's video, I'm going to talk about my top 5 picks for stocks in the month of April in 2021. Let's get down and let's check these out. My first pick is Tesla. Now, of course, you may be saying, well, why? It's declining. Well, let's actually look into it and let's see why this is actually one of my top picks for this month. First off, its volume is ridiculous. Like 35 million shares traded a day for a stock that's worth $660 is crazy. But from there, what we want to look at is its PE ratio. It's dropped from 1,500 down to 1,000. So that's actually that's big. Still, 1,000 is very high for most investors. Even myself, technically, I would not be investing in it if I listened to my own strategies. However, I think that this has some room to grow, and I'm going to get into that in a few seconds. It's had crazy growth recently. Year to date, however, it's down massively. Its top was over $900, and of course, now it's starting to stabilize. It's had a massive downturn, and then now it's starting to stabilize within a range. If we can get past roughly 700 again, I would say that this stock has some room to run. If we look at the financials, their last quarter wasn't very great. However, the 3 quarters previous were fantastic. And then if you look at the history of revenue and earnings growth, it's huge. You're looking at a company that was maybe 11 or 12 billion 4 years ago. Now looking at over 30 billion. That's huge. That's double in 4 years. But also now they're starting to make an earnings that is profitable, which is huge. They have also just invested recently in Bitcoin to accept that as payment. However, that Bitcoin, since they bought it, apparently, according to the stories I've been reading, has already doubled in value. So that is actually quite funny because now that $1.5 billion that they invested is now worth $3 billion, which means that they just profited $1.5 billion in cash, essentially. And I don't think that Bitcoin's going to be declining anytime soon. It's almost like gold at this point where every time the market goes down, Bitcoin goes up. So that's just how it looks like it's going to work. Also, as of today, at the time of making this video, a big story that came out from CNBC was Tesla delivered 184,800 vehicles in its first quarter of 2021. Meanwhile, Model S and X production dropped to 0 mainly because there was a upgrade that's happening to their factory, and let's also remember that they were only expecting 160,000 vehicles to be delivered, but they got 180,000. That's 20,000 vehicles more in 3 months, which is huge. And even though they say it dropped to 0, they still delivered 2,000 of those vehicles. However, they like to put those headlines in just because, of course, 2,000 is basically 0 in the grand scheme of things. My next pick is Carnival, which has had a massive run recently, and you're probably also still saying, why? Why this company? Well, let's actually get down to some of the facts. So basically, Florida is one of the biggest ports. They have multiple ports for Carnival ships, and Florida is actually starting, and they're going to the Supreme Court. They are actually suing the government of the United States because they want to open up their ports for the cruise lines. And of course, will that make anything go faster? Who knows? But I'm going to tell you right now, as soon as they are able to cruise, as soon as international travel is allowed back again, because the Canadian government's basically locked down anyone with a $2,000 fine for traveling, that basically once everything's open again, there's going to be a lot of people with pent-up money that they have been saving because there's nothing to do right now who want to go on a vacation, and one of the most popular vacations is a cruise, and Carnival is the cheapest. So that is why I think that Carnival is a great pick, at least right now, not just this month, but into the future as well. They trade at an average of 42 million shares per day, which is a crazy number. It may say that there is an ex-dividend, but that's not going to happen. There is no dividend right now with this stock. Now, their earnings in the second quarter of last year was massive down. That's not good, but of course, at least the last couple of quarters, they have been sticking to what analysts have been saying or thinking or wanting them to have happen, mainly because there is 0 cruises happening right now, so they really need to cut their money. They need to cut down their expenses and be able to live off of some of the loans that they're taking. And that's no surprise right there. The revenue, the earnings are just not there. The 5-year chart is actually not that bad. Like, we're seeing something that trades within a 40 to 70 range, and I think that it could easily get back to $40 once the cruise lines start opening and start bringing money back in. It will take a few years to get back up to $70, but at the point where it's at right now, which is around $26, you're now looking at something that could have massive returns, and within 5 years, they'll be probably back to that point, and within 5 years, they will be probably paying a dividend once again. The third company is Southwest. Now, why would I invest in Southwest? It's actually at the top of its range recently because, of course, everyone is starting to travel once again. Southwest is more of a domestic style transportation where they just basically do most 99.9% of their flights are within the United States. The United States is opening back up. Texas, Florida, even New York is starting to get opened up back again. And, of course, that is their main market, and they are a cheap alternative to travel. I use Southwest when I go traveling. I usually drive over to Buffalo and fly down to Florida or wherever I'm going to go, and Southwest is just cheap, and they're great. They have a great staff. They've always been nice to me, and I can't say enough about Southwest. They're an amazing company when it comes to hospitality, but I think that they have huge growth because there's pent-up demand for people to travel. People in New York want to get down to Florida because, of course, they hate the winter. It's starting to be summer right now, but when the winter starts up again and everyone is vaccinated, or if you're going to take the vaccination, I don't care. It's your own thing that you want to do or not, but from there, if you're going to travel, you're probably going to be looking for a cheap flight, and Southwest does that. Southwest was trading within a range. They were trading basically between $50 and $60, $65 per share, and now they're back up to $61. Is this good? Well, I don't think it's amazing. I think that this should have a bit of a pullback sometime this month. And when it does have that 3, 4, or 5% pullback, I would start buying in because I think that it could return to these highs in that 65 range. And of course, because of such the pent-up demand, they've gotten rid of some of their older aircraft as well, that they're going to be more profitable than they were before. Because when they get rid of the old aircraft that just can't fly anymore because they've been sitting for so long and they were old anyways, they just purchased 100 and something planes from Boeing. They're going to be having more profitability because their planes are more fuel efficient. They're going to be more profitable because they have restructured how they hire staff, what staff they need, and everything like that. They've gotten rid of all of the dead weight in the company because they really needed to cut down on how much they're spending. So I think that this could actually lead to a more profitable Southwest, but also a massive boom in being able to travel because, of course, everyone wants to travel. It's been over a year now. Everyone wants to get the hell out of the house and go somewhere. And when we really look at the earnings, they were not doing fantastic in the first quarter, but at least they beat the expectations. From there, they've beaten expectations all the time, except for this one where they missed. I personally think with the first quarter being where it is, with basically the United States starting to open back up, I think that they're going to beat the earnings call. Of course, their earnings and revenue weren't the greatest. Their earnings before, they had a lot of dead weight coming on. So, personally, fantastic for the company to be able to get rid of some of the dead weight, and now they're going to be more profitable than before. National Bank of Canada. Yes, finally a Canadian bank stock. I always talk about Canadian banks. I love Canadian banks. They're amazing. Now, the reason why National Bank is one of my tops is because, of course, they do pay a dividend of 3.33% at the time of recording this video. They do have solid volume, but their PE ratio has finally dropped below 14. And every time a company has a little bit of a pullback, it's time to buy in, or at least to get a little bit of your money in. And, of course, they've had their pullback, and they've gone from just over 88, almost $89 a share down to 85, which is actually good because they've had such a big run. They needed a little bit of a pullback. This ends up being a 4 or 4.5% pullback if my math is right. And whenever there's a 3, 4, or 5% pullback in a bank, that is usually when you want to buy in. Now, of course, this could go a little bit lower. Who's to say? But in all reality, when we want to look at it, it's had a 4 to 5% pullback. It put a little bit of money into it if you were thinking of investing in it anyways. If it goes down, buy more. If it goes up, you're good. It's had solid dividend growth, and of course it's basically frozen its dividend at 71 cents, and it's going to continue to pay that out until of course the government allows the banks and all the other companies to raise dividends once again. And I'm going to tell you right now, all of the Canadian banks are in the same boat. They are not stopping a dividend, they're not cutting a dividend, they're essentially freezing it where they are paying out the same amount. They're not increasing it, but paying the same amount. And they've done this a few times in the past, like in 2008. However, when we really look at it, their earnings are actually growing during this pandemic, and their earnings are still growing during this downturn. So what I'm saying right now is, once they are allowed to raise their dividend, it's going to be a massive raise, mainly because they are still making money, but they're just not allowed to raise their dividend at the time of making this video. TD is another Canadian bank, solid average volume. Also, a little bit bigger dividend than National Bank, but the reason why this one is in my list is because it's actually below 13 PE. You generally want to pick up banks in that 12 and under range, but there's no bank under 12 that I've seen right now, and TD, because of their recent pullback, is below 13, which is getting close to 12. Could it go a little bit lower? Possibly, but this could also be a rounded bottom, which means a little bit more growth afterwards. And over the last month, we have seen that pullback. It did go from about 66 down to about 65, just under 65, which is a pretty solid pullback. It's a couple of percentage points. It's not huge by any means, but it has had ridiculous growth because of really good earnings during the pandemic. And everyone was talking about Apple and all the years ago, saying, wow, they are making a solid revenue stream because of just revenue from the cloud, and it's just residual income coming in. It's passive, it's fantastic. Well, guess what? The banks are doing that now with their bank fees, their MERs, and things like that. So definitely, this is a great way to invest. I think it's got a huge growth opportunity over the next couple of years. It's also had solid dividend growth over the last couple of years, and also great financials when it comes to revenue and earnings. Their earnings actually went up year over year, even though their revenue went down, which is actually quite funny because they basically cut dead fat, I guess you could say, out of their company. The earnings was not great in quarter 4 of that year, but that's 2017. I don't know why they are showing that. But either way, 2020 was not a bad year for this bank. Anyways, these are my picks. I hope that you have enjoyed. If you have, hit that like button and subscribe. I hope this has given you some ideas into what to invest in. And of course, never listen to a random YouTuber. Always do your own research. I'll see you guys again next time.